We're going to move to our third panel. And as Bjorn and Arne before him mentioned, there are still places for where, even though there is such a thriving market, and we're still at the earlier stages of this industry, especially out here in Central and Eastern Europe, and there is still an important role for public financing. It's in order to help offset some of the risk and underwrite a lot of the private investment that's going into the sector. So even though there are many market players, there is still very much an important role for public infrastructure financing. And so now we're going to talk to some of the people who are thinking about and structuring these deals on a daily basis. We could not have a better group of panelists here to talk about this topic. And so I'm going to introduce them. And the first person we have is Mr. Frank Verbeek. He is the managing partner at Drake Star Partners in Amsterdam. And Drake Star Partners, for those of you who don't know, they're an advisory firm, and they have an unprecedented track record in advising on transactions in the charging point operator business. They've worked with Allego, with NewMotion, with ChargePoint, with PodPoint, and others. So you're really going to hear from one of the best experts possible. We also have Antongiulio Marin, who's the Deputy Head of Unit, Transport Investment Unit at DG Mobility and Transport at the European Commission. His team is responsible for the very type of financing mechanisms that we're discussing, and so it'll be great to have his insider perspective as well. And then finally, from the European Investment Bank, we have Mr. Francois Gaudet, who's the head of thematic impact finance operations there at the bank and is a senior banker in the equity, new product, and special transactions department. So also thinking creatively about how these deals can be structured and the roles of the various financing elements. So there's a lot to cover. We have incredibly expert panelists. And with that, Peter, please take it away.
Thank you. Antongiulio, Frank, Francois, welcome. Thank you for having us, and thank you having you on the board of this panel. I would start with a little bit of my thinking. It's what really fascinates me on the business of charging and providing of charging business is that how quickly it evolves. Maybe just to remind all of you, in 2014, I think it was for the first time when the Dutch government started to roll out a public DC charger network. And now it's the end of 2020, and the industry is really well performed. We had many interesting companies as this previous panel speakers, and it's really evolving very fast, very rapidly, and especially taking into account that we are not talking only about the software business, although software is extremely important, as we heard, but we're really talking about down-to-earth investment on the ground and a kind of the energy sector investment. This industry have been created with a great support of public authorities, especially European Commission. A lot of companies benefited from a so-called Connected Europe facility, which we were benefiting as well. This is the final event of one of such a project. Between 2014 and 2019, I think the core network of the chargers across the Europe has been built based on this program, on these facilities, on this support from European Commission. So this was really instrumental in this period. But we are coming to the period where even the public money start to flow in very high intensity into the business, and I think Frank can use a few words about it. But still, we are, I would say, finishing one period, but we are in front of another period, and it's which will require much larger scale up, much more charging points, and deployment of much larger volume of a capital. So I would be really looking forward to hear about how this could happen, how this could be financed from various sources. So let me ask first, Antongiulio, you maybe, what kind of support European Commission is thinking about in this another period? You were instrumental in first one, and we are coming to another one. So where's your role of the European Commission in that? Muted. Okay. I don't know.
Can you hear me?
Now, yes. Yes.
Okay, many thanks for the organization. That's excellent given the circumstances, and I think the discussion is very lively. I like to summarize a bit the journey that bring us to the instrument that we will put forward in the next period, basically. I mean, as I heard from previous panelists, I mean, 2014-15, we were supporting with a Connecting Europe facility a few pilot scheme, basically to test technology, to put stakeholders together. Actually, it was more an idea to have people working together, and we are being ourselves surprised, dynamic, and was the market development. The journey, our reflection starts back in 2015 with our partner, which is the European Investment Bank, of course, and we have, of course, close relation with them. And we have sat together at that time and looking around the market, and we realized indeed that the market was in 2015 very fragmented, geographically speaking, technologically speaking. Business case were rather different. So at that time we say, well, an instrument to support the scale the deployment, one fit all instrument would not have worked. So we put forward a plethora of instruments. We tested at the pilot certain level of approaches. Broadly, we agreed that blending as a broader approach would make a lot of sense. So combination of grants from the city with, of course, the possibility to have financing from bank. We have tested at that time a way of conventional call for proposal to we have put forward blending call, and blending call was an open system, even open to commercial bank, to combine funding with the grant from the public sector, rather in a scope. We have been moving to a more narrow scheme, which was and is still up and running, the blending facility. And the blending facility is a way we have built more close relation with our implementing partner. Implementing partner, again, are the European Bank and a National Promotional Bank or other public banks. The blending facility is up and running, and it will keep running until 2021. So it will ensure the transition between the current period with end in 2027. So the blending facility actually is an open call for proposal in a rolling basis, because the idea was to follow the deployment of the market. We rely very much on our partner. So it's our partner which evaluated the project for us. And at the end, we roll out as much as possible a quick our grant. Our contribution is very much focused on infrastructure, but it is also open to support mobile assets. So in particular, the segment of buses and public transport. But broadly, the facility is open to any kind of vehicles, which can, of course, help to match the infrastructure demand and offer. We have been also putting forward already in 2015, and that was requiring quite a lot of work. Another flagship instrument, which I'm sure Francois will develop a bit more after me, is a very innovative company, sometimes small company, sometimes even service company without a large asset behind, which are of course very risky, but they are essential to keep the market diversified. So those are actually non-incumbent or new entrant in the market, and we are very such company. I think we have done with an instrument under the CEF Debt Future Mobility, and our colleague in research, they have done with a similar instrument, which is Inofin. I think GreenWay is one of the beneficiaries of this instrument. So we are very proud, because we think this is a way to keep the market healthy, diversified, support also the new entrant in the market. So this is very complementary, and I think 2 years along the line, we are now assessing the pipeline with the EIB, and we found this really successful. Probably develop a bit more on this, but now I'll stop on this, and I'll perhaps discuss what we can do in the next period. So this period has been closed. We have put forward, I would say that altogether, close to 1 billion of public resources. If you put together the Connect Euro facility, we have also been able to have some additional support from the NER 300 fund, which is managed by DG Klima and by research funding. So I think this is also an interesting aspect, that we have been able to combine funding at the union level, a different program. I think we will keep doing it. So the concept of the cleaner transfer facilities is, to me, still valid concept, offering a certain number of different products, and because we have different programs that can contribute on it. Alongside, we have seen in the next period, there is the recovery plan. This, of course, is the big elephant in the room, if I must say. The recovery plan is huge in volume, and I'm sure that a number of member states will use such an amount, which is 500 billion in the coming 3-4 years to commit, I am sure that a number of member states will use that for supporting state aid support, I would say, to national scheme. So we rely very much on what the recovery plan will probably do. The member state need to put forward their plan by April next year, but we have already now the feeling that state aid scheme will be for alternative will be clearly supported. So we need to remain complementary. The union program, as you said, they are more centralized, so we control much more what actually we do. We will focus on priority. So under the facility, I cannot now already estimate the envelope, but the envelope to support alternative fuel will be substantial. And again, the last information I can give you is that blending approach broadly, I mean, both being a true financial instrument like the future mobility or grant plus financing, I think is to be supported. And again, we have two programs which will play a great role. I mean, the Connect Euro facility and the InvestEU. The InvestEU is the new tools that the Commission has put forward. Is a substitute of the FC, but is more policy driven. So I think the InvestEU also represent a nice opportunity for the company, a broad size. I mean, from small to large company, and as across business case and technology, I would say.
Thank you very much, Antongiulio. Francois, maybe really hand over to EIB because that was mentioned several times in previous sentences.
Yes, thank you very much. Yes, the EIB is very happy with its collaboration with the European Commission and DG Move, especially because it allows us to roll out this future mobility facility, which is really a facility that is in financing term at the breaking grounds and at the edge of developing models. And that's important because in an emerging industry such as yours, the jury is still out. We see many different business models, and the prior panel discussed the value chain of the whole EV charging experience. And the breakdown of the value in the chain is not entirely clear. At least to commercial banks right now. Maybe it is clear to those of you in the industry, but frankly, having the privilege of looking at many business plans nowadays, I can tell you that you, the industry, have very different views on what your value chain is and what is the right emerging business models. And that makes it difficult for poor bankers like me to understand where it's on which horse to bet, because some of you see themselves as energy providers, some of you see themselves as enablers, platform, non-physical asset. Others want to show us that the model is a service provider to asset holding companies. We have investors, long-term investors that are looking at your industry, trying to see if they can accept the risks of those asset holding companies and looking at you as service providers. But our role is to support the emergence of those different business plans and to support the rolling out of the physical infrastructure, to support our mandators' policies, which is the rollout of EV charging infrastructure, and that's very important. I think the evolution of the market is coming. We see more commercial banks taking an interest. We see more pension funds taking an interest in financing your sector. So I would not say that public funding is coming at an end in the sense that you still have some demonstration to go, but for sure your industry is achieving a critical mass that traditional financiers are getting comfortable. And I think that we've played a role in bringing them looking at the models that we're financing, letting them live for a number of years so that they can make their own judgment on where the sensitivities are. But of course, the market, it's not only build it and they will come, it's also very important that your industry delivers a unique, comfortable, reliable charging experience, because at the end of the day, business models are just models, and it's the charger's experience that will drive your industry. And I think I'll leave it at that.
Thank you, Francois. Great comments. Yeah, but indeed, you're right. Everything is evolving. It's not only a technology, not only the software part of our business, not only hardware part as well, business model. But be patient with us. We have only 6 years. We are just getting to the school, so that's not so easy to be everything defined very well. But as you noted, I think there is already this business is already catching up the interest of the private investor. And Frank, and I would then like to hand over to you, because you had this great chance to work with as well with the public authorities, EIB. I know that you work with them as well. But on the other side of the table, there are private investor who wants to deploy still larger and larger volume of capital into this emerging industry. So how do you see the situation now in this respect? I'm muted? No.
No, I'm muted. Can you hear me?
Now it's okay. Great.
Okay. So I was about to say that we are still at the very, very early beginning of, in this case, the new industry, because Bloomberg calculated that we are around 1.5% of the overall installation and infrastructure that needs to be installed in the upcoming 10, 15 years. So in a way, yeah, I think we're still learning indeed. Whether we are 60 years old, I don't know. The most companies that we supported indeed are between 5, 10, 12 years old. So even the technology is still in a very early phase. We now also, in, let's say, the second panel heard it was a lot about, let's say, customer journey, customer experience. What we're also still seeing, of course, is this disbalance between cars to market and the infrastructure, where the OEMs are in a way complaining that the infrastructure is lagging behind. And then, of course, the infrastructure players are asking the OEMs, where are your cars? There's always, let's say, this discussion. And I would not say, Francois, that we consider you as a traditional banker. I think you really know a lot more about the industry than indeed the traditional banker. So it's a pleasure to work with you on indeed finding solutions for especially these companies that can already show, of course, from the strength of their team, from the technology, from the customer footprint, that they can scale up. And indeed, private money is already available. We, of course, in the beginning, saw the ones that really support VCs, the companies that were in a very, very early stage, indeed something between 10 and 6 years ago. They now mostly successfully sold their business. So in a way, new VC in private equity is indeed looking into the opportunity. And then, of course, the more, let's say, strategic buyers, if we may call them, the oil and gas, the utilities, sometimes OEMs and other companies, also the tier one, of course, the suppliers to the OEMs really needed to step in because also of fear of missing out. And whether Christopher calls it something different in consolidation, whether it's defragmentation or unification, we also believe that at the end, and we don't know where exactly, but it is an industry where the winner takes it all. So for us, we can really see charging as a service coming up as a new business model. Early days, maybe, but we do have, of course, let's say, certain data coming from Norway or the Netherlands or the countries where indeed EV charging is really developing very well. And I think collecting these data and transforming them into intelligence really delivers us a lot of opportunities to give comfort to indeed private investors. So the ones that are able to scale and therefore play a significant role in the European infrastructure, we believe there will be plenty of money indeed available. The infra funds, of course, they really like to write tickets of around 300, 400, 500 million. Pension funds, the same. And indeed, also, of course, the larger PE funds now truly believe that this is proven to be a segment where they can make their returns. Maybe not in, let's say, the traditional 5, 6, 7 years, but a little bit longer. And then again, we do have the EU and, of course, the EIB to ensure that, especially the first phase of developing such companies, can be done in a very safe way. Because being underinvested and by that not having the opportunity to scale, I think that is the most difficult situation for a company to be in.
Mm-hmm. Great. Have you seen any example when this mix of a, let's say, private capital with some kind of a public support, either in form of loans or even grants, worked well, or which you would like to point out to?
Well, there are a few examples. I think for us, of course, the Allego example is a very good one, where we believe EIB, together with traditional banks, and of course, in this case, an infra fund, Meridian, is able to show not only, let's say, that the money is well spent at that time, but especially now, where the company is doing extremely well. From what we learned, the company is also profitable, and therefore, indeed, it has the opportunity to already return some of the money to, for instance, let's say the lenders, or in a way make sure that they are a very bankable company. So Allego is one, Ionity one. There are many examples. Probably Francois knows better which examples really he uses as a sort of reference internally to show that it is indeed the right way to do. But we truly believe that, especially in the early days of an industry like this one, you cannot do it without EU and EIB, because, like for instance, GreenWay, the car market in Slovakia and Poland, of course, it's growing, but it's still not really at the level where you can show utilization and therefore can really perform and have the revenues that you would like to, in this case, either attract equity and or let's say attract the debt financing that you need.
Probably depends as well on the risk taking of the private investor. Francois, over to you. EIB is one of the largest lender in the world, and you are famous for financing even the very, very large projects, multi-billion projects, basically. Do you think it's already the time to EIB to invest in the projects like the large scale, 100 million over, or do you still concentrate on smaller checks and maybe supporting of the initial rollouts? Or is your strategy different in different parts of the world? Muted. Francois, you are muted. Sorry.
Where I'm located within the thematic impact finance, we think small is beautiful. We like new business models. So we're not super representative of the great many things that EIB does in its annual lending. To go to your question, is it time for scale up? I think it's very different. This is a truly emerging sector. If you think of renewable energy, EIB was able to go into the offshore windmill with very large tickets at the beginning, and now with EDP we've supported the floating windmill, and now the market is going there. I think it's a different situation because there we know the energy markets, we know the production, we know the costs. Here in this emerging market, really the speed at which the charging pole will be occupied changes everything in the business plans. And for very large tickets to come, you need that baseline or that base load of frequency of charging and sessions so that you have a baseline, and that will determine the capacity, the leverage capacity of the model that the industry will be looking at. And once you have that stabilized, then it's a matter of multiplication. You can start doing serious numbers and leverage. But until you have this very, stable, almost unchallengeable, and there's, of course, you can challenge everything, but until you have this base, then it's very difficult to do very large leverage transactions, and you fall back more on looking at the business model, looking at the business case in specifics, and then the lending there. And that, by definition, brings smaller, riskier, less scalable financings.
Thank you. Maybe Antongiulio, to you. There is, European Commission was very active in funding the public infrastructure across the roads, across the TEN-T corridors. Our first panel was more about public infrastructure. Second was about more workplace, this kind of private and semi-private domain. Do you see a role of the European Commission there as well, or do you see it rather more on local governments, the states, to support this part of it?
Well, we with the Connect Euro facility, we support both. We do not discriminate between private and public operator. We, in general, focus to a public accessible infrastructure. These do not, of course, forbid some exception. If you think, for example, to buses, the depot normally is not public accessible. We see now the issue of non-public accessible infrastructure, for instance, in scaling up of alternative fuel for heavy-duty vehicles. If you think about people, they would need the infrastructure, and we do not have the expectation that the infrastructure which are used by those operators are, generally speaking, open access. But of course, I mean, because we are speaking about public fund, we have an expectation that whenever it's possible and appropriate, such infrastructure have open access 24 hours 7 without any bottleneck in terms of accessibility. I mean, we have also noticed that sometimes those infrastructure are virtually open access, but de facto are open to client or to. This is, of course, this is a graduation. We are more strict when we use grants, and we are, of course, a bit less strict when, like, for example, in the case of the CEF debt or future mobility, we use financial instruments. So financial instruments, by definition, need to be a bit more broader in scope, but more flexible in terms of eligibility. We have to be more focused and narrow when we use grants because we risk to distort competition. Now, which program will support what? I mean, in the next period, the Connect Euro facility will need to focus very much on the TEN-T network, because that's our sort of legal base. And the InvestEU will be broader in scope. We can support both urban and network infrastructure. Of course, as I say at the beginning, the other main funding program is the Recovery and Resilience Facility, which go a bit together like the structural fund. Those are decentralized and very much in the end of station, but I mean, we have not yet visibility, as the member state would rather go for public infrastructure. But again, that's very much depend on the member state. The member state to somehow combine their resource, so to use the InvestEU somehow to channel the resource, or to channel the resource in the form of financial instrument. And then, of course, if you do so, financial instruments, of course, are somehow more an instrument which are very much can help the private sector, I must say, because are the sector which face market risk or market failure. The final point I want to say is that, again, this is again a general discussion that's before COVID. COVID had as well an impact on the previously solid kind of public company delivering public transports, and those companies are facing some time and now issue with solvency. So this also remain an issue, and that's the post-COVID discussion, and we need to check actually what would be the behavior of the member state. We have seen that member states have supported with some flexibility they have now in a state aid, also try to support public company and to address their issue of solvency. So that's the possibility we will have, and where the CEF, of course, the Connect Euro facility will focus.
Okay, thank you. I know that this is not the ODG, but I know about as well the program of renovation WAVE, which is focused on the improvement of energy efficiency of the buildings. And if you talk about the private and semi-private charging, I think this definitely fall in the scope of the energy management of the buildings, even if it's a private area. So this kind of things could help as well. Yeah.
100%. The renovation wave is, of course, the renovation of building. We have regulatory obligation in new building, for example, to install charging points. These are not the kind of charging point we are focused very much as, because those are private use, are low voltage or low power, basically. The CEF, because we are looking at a long distance, we are rather focused on high ultra fast charge or fast charge infrastructure, so that are more costly and they are more typically an infrastructure. The one under the renovation way are more private installation, so we consider this indeed more an energy issue.
Yeah, thank you, Frank. If you look a little bit in the future and about deployment of a private capital in these things, give you guess how it will evolve. Who are going to be investors? Are they going to be strategic investors incorporating the charging business into their existing businesses like oil and gas utilities? Or do you see rather financial investors supporting a completely rise of a new industry, like completely new separated industry from the existing one? How do you see your personal guess?
Can you hear me?
Yes.
The thing here is, of course, for oil and gas or other commercial companies, strategic buyers, also the nearby or at least to be foreseen profitability is going to be an issue, because also then they at the end, of course, need to make a return on the capital invested. Their other source of income is in a way quite developing the wrong way, I could say. So we truly believe that there is much more interest from, indeed, as Francois also already pointed out, pension funds and other parties, and really do not underestimate them, because they do not just bring money, they bring a lot of expertise in real estate, in hospitality, of course in infrastructure. Sometimes EV charging and telco are in a way compared from an infrastructure point of view. So we also believe that in this case, pension funds and the infra funds bring a lot of intelligence and insight. So if I would make a bet, of course, a few oil and gas companies are still lagging behind and therefore need to be quite acquisitive. From, let's say, especially funding the winners, because everyone is, of course, looking for the ones who at the end will survive in a situation where, let's say, e-mobility is around 50 or more percent of overall, especially, let's say, the car mobility. And yeah, I think there's so much money available from, indeed, the infra funds and the pension funds and the other investors that they will be the ones who are indeed, luckily, already eager and informed on, let's say, the opportunities in this field.
Yeah, thank you. I cannot agree more. It's about the education of all players, including the investors. They need to get an understanding of this. It's new, it's fast changing, but as well, it's extremely interesting going forward. Thank you, all of you, for the panel for the moment. Maybe Aaron, hand over to you if you have any questions, if not specific to this panel.
No, we don't have any questions about financing about this panel. So
you
must have covered everything already.
Exactly. Perfect. Thank you very much, Antongiulio, Frank, Francois. Thank you for being part of it. Thank you for contributing.
Thank you.
Aaron.
Pleasure.
Thank you.